Good morning, one and all, and welcome to this morning's video. So this morning I have just the one pair on watch, and that is Aussie yen. The market looks like it's going through a bit of a period at the minute where it needs to find its feet and give us some indication of what it wants to do. So I've just parked a few of my pairs that I would otherwise might be looking for. But anyway, let's break this pair down for you now. So I'm looking to get potentially long on Aussie yen. I'm not anticipating anything shaping up on this, but I've just because nothing else is shaping up, I've just put this on just in case it shapes up a little bit more quickly than I was anticipating. As I said before the bank holiday weekend, I wasn't anticipating a trade on Monday, but specifically because it was a bank holiday Monday. But then the trade shaped up, so that was a prime example of exactly what I was talking about, that just because you don't think something's going to shape up, you still have to be ready just in case it does. Okay, and people might be thinking, yeah, but it was a loss, and it's like, okay, but if you take those trades 100 times, you will make money. So even though it was a loss, it was still in my interest to be on the ball, because the majority of the time those trades will play out. But anyway, let's break this pair down for you. So on the super higher time frames, we have the high here, the all-time high according to my data. We have the gap to it. Okay, we often fill the gaps, break just above, and then we move to the downside. Okay, so we kind of have this structure to it. We have the 1 2 3 1 2 3 leading into that area, and then we push to the downside, and you can see that we have a series of, on the monthly, you can see we have the impulse correction continuation. So potentially, because we've tapped this all-time high here and we've filled the gap to it, we could be taking out this low, especially because if you look at this, we've only kind of wicked to this area. Okay, and if we drill down a little bit, there's probably a bit of a gap there. So we could still be in a downtrend, but bearing in mind we're on the monthly chart, we could capitalize on a shorter term move to the upside in the meantime. Okay, so with that in mind, if we look here, you can see what has the market done. Well, what the market's done is we had a lot of volume here. Okay, there's a lot of volume here by way of this structure. We can see the middle section within it. Okay, we break just below and we move to the upside. So because of this, there's clearly a lot of volume here, and we have tapped that area. Okay, and we've pushed up aggressively. Okay, and what have we done? We can see this, as I said yesterday, I like it when I can see a lot of the component parts on the higher time frames, and in particular the super higher time frames. We've pushed up from an area of significance where there was volume built last time around, and we've moved up after that. We've got a correction, so we've got an impulse correction. So this could be a continuation to push higher. Okay, so that's the thesis on the weekly chart. If we just zoom in a little bit, you can see that we have the correction there. So we have the push up, we have the correction. It's a slightly wide correction relative to the move up which has preceded it. Okay, so that is one factor in my thinking. Okay, and because it's so wide, I don't really want to get caught up in something like this, because this could just go sideways for quite a period of time and then end up coming down to fill those wicks there. I don't really want to get caught up in what looks to me a bit of an atypical sequence. Okay, so and especially if we just analyze this, price action here. Okay, what am I looking for? There we go. We're looking for that. If you look at this, I can see this even on the 4-hour chart. We've left a gap here. So there's a sharp move here, right? And then we've moved down. See how we keep gapping, especially this one, to this area. Okay, so what could end up happening is you end up taking a flag here. You look to get long in here. You get tagged in, tagged out. Price does something like that. That comes down. This becomes the middle section, and then we tap into the sharp move, which this low near missed too. Okay, and then you think, oh well, why did I get involved in that? Well, the fact that this was so wide relative to the move up which has preceded it is already giving me the indication that we may do something like that. Okay, and it may not be ready to commit just yet. But what I'll be looking for in this instance, okay, is, are we looking for a break above here? Because if we break above here, this area of interest, as I've got it marked, then I'm not worried. I'm not worried about these gaps if we have a deliberate correction sat just above. Because what if we just zoom out, imagine what that would look like on the weekly. We would be up here by this point. Okay, what would the monthly look like? The monthly would look a bit more bullish, but we would be above that. The daily, we would be above here. Okay, what often the key bit for me is that when we have, this is where understanding volume helps. Okay, so when we have all of this volume built up, what we often get is a little hover outside of the structure. Okay, so if we get a little hover outside of the structure, it won't typically hover for too long if a lot of volume is built up beneath it. Okay, so what you're essentially doing is capitalizing on the volume that was generated here by way of the small correction just outside it. Okay, because what's essentially happening is all the people that were trading within here, okay, as we get this correction, many of these people bail out of their positions. So after a tight correction, you tend to get a big move to the upside. Okay, so with that in mind, and also considering, I'm also considering things like, I'm considering the size of the overall move down. So I'm not looking for any kind of little 5-minute continuation there, like 6 to 8 corrective 5-minute candles, or a 15-minute continuation, 6 to 8 corrective 15-minute candles. Because of how large the overall move has been down, I'm looking for something with a bit more weight. Okay, which means, in my experience, if we just get that guy off the chart, which means a 1 hour continuation. So what I'm looking for, as I said, one of the reasons I've got this on watch is because we've had a bit of momentum now, and I'm anticipating that maybe that momentum might carry us through to break above here. Okay, so if we get the break above followed by a 1 hour continuation, then I'll be looking to get long within. So if it's a 1 hour continuation, but I can't see the structure, okay, this is a key point. If it's a 1 hour continuation, where I can't see the structure, and I have to go down to the 15-minute chart to identify the structure of the 1 hour, the 6 to 8 corrective 1 hour candles, then I would be looking to get long if we had that structure with a 15-minute risk entry within the structure. Okay, so if we tap the lows and push up, I'll be looking to get long with a 15-minute entry, 15-minute rejection candle. If we get something larger where we can actually see the structure on the 1 hour chart, this is, I'm on the 4 hour chart here, but if we could see it on the 1 hour chart like that, and it was clear to me, then my rules dictate that I'll be looking for a 1 hour rejection from the base of the structure. Okay, so I know exactly what I'm looking for, and that's key. That's going to help you in trading, to not feel anxiety or as much anxiety. Okay, if you know exactly what you're looking for and why you're looking for it, trading becomes a lot more stress free. Okay, now what I would personally be doing in this instance, this could go a lot higher. Okay, because if we, let me just take that off. If we just measure this, so measure this impulse correction continuation and assume that this was the impulse, okay? And as I said, we're benefiting potentially off of the volume that's been generated here. If we get this, that would take us up to about this area. And if we measured it from the break of the correction, so by the break of the correction, I mean this, okay? If we were to start impulsing up now, that would actually take us up to potentially up into these areas, okay? And because of the slightly atypical sequence, I'm not really interested in holding this longer term, up into these areas, okay? Especially when, key point, we have a consolidation here where the consolidation, the exchange of liquidity that happened there caused a very, very aggressive sell-off, which had enough liquidity to smash through this very significant low there, okay? So because it did that, that is giving me a clue that there may be a lot of liquidity. Maybe a lot of liquidity here. Okay, so because of that and the fact that this is a slightly strange sequence, I'm not interested in holding this position long term. But in any case, my minimum take profit requirements would be met. Okay, so we have a 6% profit target there. So I would set my take profit at 90% of the range. So we would probably do something like this. And then what would we have to there? Okay, so what I do is if the take profit is less than 5%, what I do is actually set it, rather than setting it at 90% of the range, I set it actually at the high as well. So in this instance, I would likely set it there, or you could measure it. What you could do is you could measure it from here. Would that give us 90%? That would give us, would that give us 5%? Yeah, that would give us 5.38. And one of the reasons we do that is because what we find is that we often get gaps. Okay, so where you can see these near misses like here, price often won't get all the way to the area. It will get close to it, and then people that are FOMOing into the sells, for example, get in too early, and then you end up with something like that. It then taps the area, and then you go from there. Okay, so these gaps are largely FOMO, and you often get steep pullbacks, which means that you might think, well, yeah, but it still hit the area. Well, it may hit the area, but what you've got to ask yourself is, if price is pulling back all the way to here before it actually taps the area, are you comfortable letting a 6% profit pull back to 2% before it actually taps the area? Okay, and you might say, well, yeah, I am. Okay, all the power to you, but would you be happy to do that on £1 million account? And you might be saying, well, no, I wouldn't do it on £1 million account. Well, don't do it on a small account then, if you're trading a small account, because all that will happen, if you do have aspirations of trading a larger account, all that will happen is you'll be, sitting through these deep pullbacks on your smaller account. You get to your million pound account, or whatever your whatever capital it is, the larger capital, and then suddenly you start trading differently. Now, that's going to, I don't know about you, but I don't want to start trading differently at on £1 million account to how I was trading on a small account. Okay, you want to be trading the same way consistently throughout, because that's why would you, if it ain't broke, don't fix it. Why would you start tinkering with things on larger capital? So by not sitting through larger pullbacks, you're ensuring the practice of good habits on the smaller accounts, if that makes sense. But anyway, that's what I'm going to be looking for today, folks. Let's see what happens. If we just trickle around here, then, this is where people are taking a lot of losses. People are getting long here. They're getting washed out. They're getting long here. They're getting washed out. Okay, they're trying to get longer here. They're getting washed out. This is where the bloodbath is happening. This is where a lot of money is being lost, and all we have to do is not FOMO into the positions with the people that are just trying to get in willy-nilly. Excuse the expression. We can just wait for the market to show its hand and then look for that. And then that's all I'm looking for today, folks. I hope you've enjoyed this video. Have a great rest of your day, and I'll speak to you again in the next one. Adios.